John, which is the most important factor in today's oil market? The Chinese government raising fuel prices, Tim Geithner's comments, or if you believe Hormuz will be closed, they'll sell you the Empire State and Egyptian pyramids from the Saudi oil minister?
Well, I think the latter of the three is something that the market is addressing. If you look at Saudi capacity, the market, I believe, is quite incredulous to what the Saudis can do. If we just go back merely 12 months ago, and we all recall the situation with Libya, it's generally accepted that the Saudis produce between 10 and 12 million barrels of oil per day. When Libya went offline, we were looking at between 1 and 1.5 million barrels per day. So it took the Saudis close to 4 months to come online and able to replace that. So the Saudis have a vested interest in talking down the prices of oil. For one, showing that they do have that supply and keeping oil prices calm prevents the need for a drive towards alternative energies. And going back to 06, 07, and 08, it was this drive towards alternatives that could potentially keep the Saudis out of that market. Right. So I think the latter is most important.
So where do you see oil prices heading? And what, for you, will be the principal catalyst for those movements?
For me, I think oil is going to be largely determined by two factors. One, the geopolitical risk that exists in the Middle East, issues like the Straits of Hormuz, and number two, what happens with the U.S. dollar and the influence of the U.S. dollar being on interest rates. We saw a sell down today in the S&P. We saw a sell down in silver and in gold. And what's interesting, Richard, is that the rally in short-term rates in terms of 2015 with the Eurodollars out there, the market is actually pricing in a rise in short-term interest rates.
Right, but hang on. When you start, to take viewers with us in this discussion, when you talk about the dollar and interest rates and how that's because oil is priced in dollars and therefore there is an effect on that. But that has nothing to do, does it, with fundamental supply and demand?
Well, there is a perception that the lower interest rates are the more accommodative that environment is to global growth. And there's a perception from the market right now that if interest rates increase too fast, that with growth being a major concern in China, the European, as Tony just talked about in the previous hit, that's a big issue there.
Okay, so let's just look at the numbers where you would expect to see oil. Do you have any forecasts that you want to share with us of where you see oil, say, 3 months down the road, 6 months down the road?
Sure. I think if we want to look at oil in two perspectives. One, where the price of WTI will be, which is currently at about $106 a barrel. I think that the September or October contract can pull back to $98 to $100 a barrel. And then also what happens with the spread between Brent, which is, as you mentioned, at about $123 a barrel. There's about a $17 or $18 difference right there. I think that spread comes in and compresses, and Brent and WTI both head down.
All right.